Good morning, everybody. Thank you so much for tuning into this video today. And for those of you who are hanging out live in our Discord this morning, trading with me, chatting with me, having a great time, losing money, winning money, crying, laughing, mostly crying. Just kidding. We're winners here, even when we lose. So what do we got going on today? Actually, before we get to that, let's do the shameless plug, as is tradition. If you enjoy the content, please leave a comment, like, subscribe, join our Discord, hang out with us. We're fun people. We don't bite much. All right. So we've got about 4 minutes till bell opens. Now, I want to direct your attention to our profile chart. We're just going to kind of do the intro look today. Bigger picture, we bounced off of our 200 moving average yesterday on the weekly chart as resistance. So this is going to kind of be a make or break movement and moment for our activity. A lot of the open interest on the call side has been claimed yesterday. People took their profits, and we've got a much higher put interest opened up for today. That high interest is concentrated at 375. So as you can see, based on where our profile is and where our current overnight activity is, bearish activity has the advantage. They are currently trying to take back the spike from yesterday, which was part of our gap. And now what we're going to be watching for is whether or not price action is able to sustain itself down at these levels, if they end up trying to take out the previous day low, and things of that nature. If price action gets itself back up over that 375 level and there just isn't selling to support that short interest, well, the further we get above 375, the more pressure we're going to see put on those shorts, just like we did the other day. And yes, we could be setting up for some more squeezing. That being said, the resistance that we were running into yesterday, it was becoming more and more apparent to see that that was not real buying. The resistance was kind of being slammed into as shorts were covering, and that was just kind of that, right? We started off with that P shape, and then it just kind of concentrated towards the top of the range. That's pretty traditional for short squeezes. When we start the mornings off, shorts feeling pressured, and then we come up to a fairly narrowish range and balance zone. It's not a real P shape. I mean, you can kind of see from it, it's got a little bit of it, but it's also got a range that is wide enough to give it kind of a bell-shaped curve. But I digress. We're going to be opening up pretty soon here. We may have some early trades that we'll be looking at. We're not going to try and open up short too quickly unless we get some activity that pulls up to where our 13 moving average is kind of running into our short line. That is the base of the spike. And that's going to be one of our best entry locations for shorts in the early session if we are, in fact, heading down. Because if price does break back above that, then we probably don't want to be looking short quite yet. Other than that, long positions, we're going to gauge what pressure looks like coming out of the gate, but we may not be too interested in getting long until we get above that 375 level. Of course, we'll see what happens. All right, guys, let's get ready to trade. 1 minute and 20 seconds to opening bell. Right. So our lower target for today is just above where we breached the T+4 high. And that is our lower target for today because that is right where our previous day low is. Doesn't mean that the market can't go lower, but I try to be a little bit generous with my targets so that way when I am playing my positions, there's a higher probability of actually hitting them. So if I'm trying to play short, there's a higher probability of actually achieving our low target. Because even if we're trying to play short here, if we don't take out that low and we run into a demand zone, we'll hit the low target, but then we could see bullish activity take over for the rest of the day. So that's kind of how I structure my targets. And of course, our upper target is up near a pivot level and above our point of control and all that jazz. And here we go. That's right. I have the bell sound turned off because apparently when I turn it off on one application, it turns it off for both of them, which really makes sense when you think about it because they are linked. All right. So far, we've got a pretty aggressive move upward away from the activity we were seeing. One of my charts is a little off. Let's see if we can fix that without losing time here. It's still too much. Perfect. Okay. Yeah, sorry, that's a chart on a different screen. You guys can't see what I'm talking about. All right, so we've got our first touch of our 13 moving average. Well, it looks a little bit different for you guys. So I still have the overnight activity turned on my main screen, which I think maybe we're going to turn off. All right, so there's the base of our spike. There's our short level. This is our potential entry point. We're going to watch and kind of see what happens here. We did get a pretty big ignition drive up into that. So that kind of makes me not want to jump into a short position right there. We'll see if they run into selling pressure or not. So at this point, we are hitting our maximum pain point, and we are not far off from where that high concentration of puts is. All right, I'm going to go ahead and turn overnight activity off in my main chart now. That should clean things up a bit for us. Woo, crushed that pivot level right there. Yeah, glad we decided not to jump in short when we retook the base there. This is some really bullish activity right out of the gate. So again, we were talking about having that low target above that that support level down there. But if we kind of look at how the profiles are building out right next to each other, that spike is very much telling us that there is demand in that zone. So everything that was a short squeeze yesterday is now demand. We could be seeing as well some people who were short at the top and the touch of the 200 yesterday are also taking their profit down here because they don't trust that we're going to be going any lower. And if they are short and taking their profits now, smart on them. We'll see how long this lasts. We've just hit our stop point in our chart where if we were short, that's absolutely where we would be getting out to say, yep, nope, we were wrong. But of course, we didn't enter at that location because we saw a huge ignition candle. And we don't want to play with huge ignition candles. All right. Open interest this morning is neutral, but favoring the bearish side. I don't really have any other good data points. Still waiting for our 5th minute to pass by, so our 5-minute internal charts will start to give us some information we can look at. I think we can go ahead and draw resistance line up where this first movement ended. Good morning. Hello. Welcome. Thanks for joining us. We're going to go ahead and also draw a support line down where that first pushback went to. I'm going to see if this ends up developing out as a consolidation zone for us to look for our first play. Yes, when I speak, I tend to use us, we, and other forms of verbiage that include everyone, because that way, when I make a mistake, it's not my fault, it's our fault. But of course, it is important to note this is a personal game. It is an individual game, similar to golf. You can play it with other people, but really, you're playing against yourself. But it's better to play against yourself than play with yourself. Yep, we're going to stop right there. Do 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 do. All right, so that first small little point of congestion popped up and through. We'll see if this maintains, getting up above that high put open interest, getting closer to the point where we would be looking or start looking for long positions. Of course, if I get a good signal before that, I'd probably try and snag a very small position early on. The other thing that I'm considering for this morning is that there's a possibility we start doing some consolidation on the daily scale just under that 200 weekly moving average. Similar to what we've discussed on the smaller time frames, these things also happen on the larger time frames as well. You can get congestion zones up against resistances or down by supports, and a lot of times that is when probability is building for a break, or at least a false break. So if we do start to get some congestion up here, we do start to see today, tomorrow, consolidate up by this resistance, that would lead me to believe that there's going to be a pause in movement activity until we get the September jobs report and the non-farm payrolls coming out for Friday. It's kind of been the MO as of this bearish season. They'll drive the market pretty aggressively in one direction, leading up to a fairly big or anticipated report. And then they'll either pull the rug out or they'll go with the move, kind of depending on where everybody's emotion lies. All right. So we got a touch of our long line. We got a little bit of activity above the high put open interest level. And it looks like we've reversed and taken out some of the levels that we looked like we were starting to create. So sellers are present today. This is definitely a far cry from the activity we saw yesterday morning. This is more balanced, a little bit two-sided. So now that we've got another move down, or I guess I should say our first move down, we want to pay attention to where this base is for support. And if we start to see like a steadily rising support where we can begin to draw our trend lines, and then that's going to help us determine where our best long entry is and where we should be getting out of our long entries. Of course, if we do come all the way down to our opening level and then start pushing below it, we'll probably be looking to draw our trend line in the other direction. At least to see what happens when we come down to the previous day low or somewhere near it. But now sellers are pushing back into that demand zone that we saw early this morning. There is a lot of open interest up above on the short side. So potentially people who have opened up their shorts at the 375, they are in profit right now. So if this fails to generate further momentum lower, we could see some profit taking. We could see some pressure on shorts that maybe opened too soon and aren't in profit. So we could see some squeezing there. Jeez. Oh, this weather changing. It's terrible for my voice. All right. Demand zone seems to have held up so far. We're seeing some more two-sided trading. We're going to go ahead and give ourselves a nice trend line now. We're also going to draw a support level where that based. Oh, that trend lasted all of a second. So now that that has broken, we're going to give ourselves a trend line in the other direction. So it looks like there's definitely still some demand down in that first opening drive area. The demand exceeded that ignition candle to the downside right there. Let's see if they can overtake the other ignition candle, because that was 2 in a row. And pretty soon here, we should have enough Weiss wave information to start making a judgment on who's got a little bit more power in this push-pull game we're seeing this morning. But so far, very balanced. Nothing to get super excited about, and very easy to get chopped up. Looks like we are getting a crossover in our moving averages. We're going to go ahead and put our contracts up for play now. We might be grabbing a short here in a second to try playing to our low target. And I may have just missed my opportunity. See, this is why you need to be prepared for those things ahead of time. ZB, ZN fallen out of their uptrending channels. Looking to be on the bearish side on our ES and our NQ as well. Since we are so far below our close from yesterday, all of our indices are red, except for energy, of course. Because why would energy be red? Got negative ticks on the morning. Advanced decline is below its zero line. Now, while I was looking at that, we just got a wick up to that moving average. That would have been a really good risk to reward entry location. But we missed it. So we're not going to FOMO in because now we're back down at the bottom of the range. Jeez. Apologize for the frog in my throat. Starting to get some consolidation here down at the end of this move. Trend line downwards so far being respected. But the million-dollar question, is it going to break and try and take out the low? Or are we seeing an exhaustion point and we're going to get the rotation back up towards the top of the range? Stay tuned to find out. More at 11. The filtered variety, huh? And of course, for those of you watching the recording, remember, if you don't get some of the jokes, it's probably because I'm talking to somebody who's live in the chat. So again, just more, more encouragement to join us live. It's funner. Funnerer? Funnerer. All right, trend line starting to break sideways. So this congestion point's going to be going on for a wee bit longer. Oh, I'm starting to doubt trusting it short. We did, of course, just miss another good risk to reward entry. Of course, when we're talking about risk to reward entry, we're talking about where we can get the entry point at which we stand to lose the least if we are incorrect. All right, let's start to measure some of our Weiss waves here as we're consolidating. Pretty big effort on the sell side for this activity that didn't do well. While we're analyzing that, a very small amount of buying effort just produced that move right there. So yeah, it's a good thing we didn't try to enter short off of that line. Choppy, choppy, choppy. All right, so we're back up to that first level where we found support off of the opening drive. We do have a point of control that has developed down near the bottom. So failing at this level, what we're going to be looking for next is an actual rotation below our support. But if we do beat this level, we'll be looking to see where the next point of control might start to develop. So one of the things that I'm looking at right now is I'm trying to measure visually how much beyond VWAP this upward drive is moving. VWAP on balance days is always going to kind of be towards the middle point. And wherever our point of control is developing is where VWAP is going to start moving towards, and vice versa. Point of control moves towards VWAP, VWAP moves towards point of control. Kind of a chicken or egg situation. Neither way of looking at it is wrong, but personally, I tend to view it as VWAP moves towards where the point of control is developing. All right, look at that big sell off of that same level where we initially got a supply spike. So if our two-sided trading continues, looks like we're going to start to get some apexing. In our hierarchy of TA analysis and drawing, apexes are the most important, because when apexes end, that is generally where our biggest moves start. And so far we are seeing two-sided trading this morning, so let's see if we get a nice apex to play. Pound for pound, buyers seem to be having the easier time pushing price this morning. That being said, even if it is easier for them to move price, they still have to make higher highs to, take control. It's the best way I can describe it is if you look at it this way. Let's say there's 3 people standing in a room and they're buyers, and then there's 10 people standing in a room who are sellers. The buyers are not as active, but when they are active, they're moving price in their favor. But again, they have to be more active. Otherwise, we see this two-sided trading. We go up, we go down, we go up, we go down. All right. We're going to elaborate a little bit further as to what an apex is for the audience. So when you have consolidation, condensing, price action starts to coil, what ends up happening is the supports and the resistances of the overall consolidation area start to get narrower and narrower. So if you see the two trend lines that we have drawn right now, they kind of come to a spearhead. So that is an apex. The lowest low and the highest high, when you swing a trend line from them, starts to connect and point to a focus point. So the longer that price action consolidates and coils into that funnel, the general rule of thought is the more aggressive the eventual move is going to be. So the longer price action coils and consolidates, the bigger the move in the direction. Because when you're seeing consolidation, what's happening is there is a struggle. There is a push-pull going on between folks who are running an accumulation campaign, those who are trying to push price higher in the path of least resistance, or a distribution campaign, those who are trying to push price lower, looking for the path of least resistance. Eventually, one side is going to win out because an auction cannot continue forever along, a horizontal plane. So at that moment, when one side wins out, the hope is, or their hope is, that they will then create the path of least resistance, meaning there's no more supply above them if they're doing an accumulation campaign, or there's no more demand below them if they're doing a distribution campaign. And then it's much easier to move the price further and further in your desired direction because there really isn't anything standing in your way. Let's see, using the volume profile to help determine whether we are in an accumulation or whether we are in a distribution. That one can be a little bit tricky. Looking at our volume profile, generally speaking, you'll see the value highs and the value lows, right? So that ends up telling us where the majority of trading is. Now, if you look at our apex lines, you can see that the high followed by the secondary high and then the low followed by the secondary low are actually pushing themselves up into that narrowing value zone. So to try and determine which direction it is going to eventually break, That's where our Weiss waves and paying attention to the volume is going to be a little bit more helpful than the volume profile itself. So, for example, if we notice buyers are having an easier time accumulating supply at these levels versus sellers having a harder time distributing the supply that they have, we can make an educated guess that there's a higher probability we're going to break to the upside eventually, which means once we start to get closer and closer to our focus point, we can place our really good risk to reward bets towards the support, the rising support. Of course, we can also try to play the breakout of the apex and then the subsequent retest of it, which will then give us, more. What's the word I'm looking for here? More assuredness that we are making the right choice. But of course, if you wait for the extra confirmations, you do lose out on some potential reward. But, you got to weigh it. Where's your risk? Where's your reward at? And of course, if you're playing contracts, if you enter too early, even if you enter at the best spot, you're going to be watching theta chew down the value of your contract as well. And if you end up being wrong, well, that's just going to hurt even more. So it is a delicate game of kind of balancing it out. One thing that I will also say about trying to figure out who's in control, when we watch these up waves and these down waves, as the waves start to make more and more against itself. So what I mean by that is, if you watch right now, these highs are losing momentum, but the lows, on the other hand, the low of that last wave is significantly off of that trend line. That also can be an indicator that an accumulation campaign is on the move. So if I draw another trend line here from the last touch, you'll kind of see what I mean. So initially, our apex point was pointing more downwards than upwards. But now that we've got a low inside of that apex that's much higher than these highs are from the high, hopefully that's correct English, we can see that the apex tip and point is actually starting to point more towards the middle and more towards where our point of control is. Let's see. We're going to take a look at our Weiss waves and do some volume counting. Our 1348 15-minute Heiken Ashis are showing bearish today. We have not broken up and out or threatened to start creating a crossover on those. Within our profile, we are concentrated towards the bottom of a range. Of course, we are also trading smack dab in the middle, a little bit above our point of control, so that's kind of a point for the bulls. Overall, daily trading volume is in favor of buyers by about 15%. So far today, with all the activity we've seen, there has been more buying activity than selling activity. But yeah, we're just going to kind of keep following this apex, and we'll make a bet when we feel like it's right. But now the other thing, all right, so there is one more thing about apexes we can talk about, specifically if you're playing contracts. So when trying to determine where and what contracts to play when we have an apex going on, we can actually target something a little bit further out of the money. What this is going to do is it's going to allow us to leverage a little bit harder with only taking the same amount of risk we would be if we were playing something closer to in the money. And if we're right on the move, that extra leveraging power once the price moves to that, because again, we attributed apexes to more energy being released, a bigger movement out of the consolidation, we can actually maximize gains for the particular play. So as we watch this apex starting to kind of close in on itself, as we're saying that, it looks like things are getting a little bit spicy. But what we would look for is we would want to target kind of where the median point is for the lows and where the median point is for the highs. So we would probably want to be trading the 373 contract for our puts or the 375 contract for our calls. And look at that. That was an aggressive breakdown. Oh, we also just started B period. So what looked like an accumulation campaign definitely turned out to be a distribution campaign. Now, because this energy didn't go further into the apex, this move may not have a lot of push. So we do have the lower low. If this is an aggressive press against it, we may have just made our proper low for the day, and that could be the daily low. We'll kind of see how this plays out. Because remember, when we're looking for a low like that or a high like that, we don't want to see consolidation down where it spikes. We want to see it move aggressively away from it towards the other direction. So what this tells us is there was a huge demand spike right when it hit that level, but then the follow-up selling tells us that the accumulation is not over yet. The distribution is not over yet. We can look at our Weiss waves and we can see that for that last momentum drive, sellers absolutely took power there. That wave is about as big as any other selling wave we've seen today, and it produced quite a bit of price activity movement. All right, there's our lower target for the day. Looks like we are going to be testing that previous day low. If we do hit that support point, that's going to give us a poor low on the structure. We would then expect it to either bounce away from that temporarily or break it and fix that structure rather quickly. So it looks like our 15-minute Heikin-Ashi candles were correct in telling us that we should have been looking short. And of course, the other thing we can consider looking at where our short line, our stop line, and our long line was, and one of our members in chat mentioned this too, looking at where trading was taking place versus where the point of control had developed, it was concentrating heavier below the point of control. So the weight seemingly was pulling it down. Now we get to see how well trade is facilitated down here. We just made a poor low. So this is where we would expect a lot of short covering to come in and just kind of like a bounce back in the general direction. But with poor structure, it is generally regarded that the higher probability is that at some point in the day or in the very near future, we will see that structure corrected. When you get poor structure in a profile situation, what that tells you is that the auction has not moved far enough yet in one direction to attract the opposite side of the trade. You get the opposite side of the trade when you get spikes on profiles. So like, for example, looking at yesterday's profile, that really big spike at the bottom of it tells us that there was a big demand push. But now that we've come back down and we've kind of flattened that spike out, that tells us that there is more trade to be done to the downside, which, of course, there's a gap there. There's a VPOC that we never actually touched when we gapped up. So we have poor structure below us, and the market abhors a vacuum. Or the nature abhors a vacuum. There we go. So with this consolidation down here, I'm personally not looking to play long. We're going to see if we can draw out some structure for this zone and then place a short bet accordingly. We may have already missed our opportunity, but we'll see. Clear out some of these lines. All right, so we've got a pretty aggressive downtrend now that's formed. We've got a 3-point fan. So until we break that uppermost trend line, everything is still pointing downward. Let's see. Looks like we've got a few ticks below. All right. Well, for all intents and purposes, we've created enough ticks below yesterday's low that this structure would be considered proper. We've still got the gap below us and the VPOC. So, I mean, everything below us is still pretty weak. But as far as today's activity is concerned, we could call it proper. We are still consolidating down here, and there doesn't seem to be a high interest in aggressively trading back up. So, I mean, I'm going to call it proper, but it doesn't look strong. We'll leave it at that. All right, so our most aggressive line has broken. Let's see if we've got some thin portions in our volume profile. It's probably going to be our best bet for putting in a short trade if we are trying to get short here. Getting some further ticks down into our gap. EMA cloud is strongly bearish. We've got a couple little pushes into it, but nothing to write home about. Amazingly, the amount of trade that took place between 10:02 and kind of where we are now, that volume, I mean, you can see this on the volume profile, it matches all of the highest volume levels for every other point today. So that tells us that trade is being facilitated pretty gosh darn well right at that peak. Lots of things changing hands. Yeah, that doesn't look good. We'll try a reverse channel for this little portion. See if that looks any better. So with technical analysis, while there is a science to it, it also has a very large art to it as well. You're kind of looking to find the technical analysis points where more boxes are checked. You know, if you don't have many touches on lines that you're drawing, they're a little bit weaker in the sense of what kind of information they can give you. So, like, for example, that channel that I drew before, it looked really ugly. You know, didn't really have anything that was sticking out. But a reverse channel here, we're getting quite a few good touches on the bottom line. And we can see that we've got some pushback for each top touch. Right, wrong, or indifferent, it looks pretty, so we'll call it art. I will note that sellers seem to be struggling to get more on the price action. Seen some pretty big waves right here on the selling side, and they just have not pushed price much lower. So, could be a sign of an exhaustion point. Tough to call that a shortening of the thrust. I mean, we have covered a few dollars in range. Might look a little bit different if I stretch everything out. All right. Got a little push up to the top of where this channel is. A little touch off of our 48. And a little touch off of that support resistance line that we drew, which lines up perfectly with a thin area in our volume profile. A lot of times you'll find that your supports and resistances will line up with thinner areas in the volume profile, or at least they should, because those are points at which the market turns, right? A thin area means trade is not being facilitated there, and either it directs traffic back from where it came or traffic moves on through. So now we're trying to see if we can get some better facilitation and if this downward auction is over enough to send us back up to the other volume concentration. Today does look like it's going to be a fairly balanced trading day, which means as the periods develop, what we're looking for is we're looking for long plays near the bottom of the ranges to play back towards a higher concentration of volume, and we're looking for short plays at the top of the ranges to play back towards higher concentrations of volume. Balance days can be tricky, but they can also be very lucrative if you're feeling the flow right. Good morning. Hello. Thank you for joining us. Nice to see you. So, with the touch of that 48 line, with what I've found with EMA clouds, after we've had a move like that, it does start to show weakness in the initial move, or at least weakness developing. But so far, this downward channel does seem to be holding its own. Pretty big effort by sellers there, but they took back everything that the buyers gained from that push that they put in. So that's a pretty equal push-pull right there. Still getting a nice concentration of volume here where the point of control is starting to develop. All right, we've got some breaching of that channel. This is potentially our opportunity to enter. All right, we've got a tight leash on this. We're treating it like a reverse channel. We're not going to let ourselves, get suckered into a bigger move down, which it looks like it's doing. So we're going to let it stop us out. All right, we're going to take another quick entry in again, another tight leash. See if this pops back into the channel. Because we're doing tight stops on this position still only will have lost what one position would have lost if we gave it our usual allowance. Yeah, it doesn't look like it's going to work out. Starting to consolidate under that channel. So if it was a reversal play working, yes, this is a long position. If it was a reversal play working, what we would be looking for is that breach of the channel followed by a very aggressive push back. And we would be looking to shave profits right at the middle of the channel and then again at the top. And then we'd hold a little bit in case it broke. No, this does not look like a channel reversal play. But that's also why we keep a tight stop on it. You don't want to just keep trying to add to something like this if it's not panning out for you. Nor do you want to give it breathing room. Because the whole point of the play is that it's not supposed to consolidate below the channel like this. Hasn't kicked us out yet, though. It's close. There it is. Well, no, actually, ironically, even that right there, that wasn't going to pay us much. But it looks like it is going to do what it was supposed to do. So, right there, the middle, that's where we would have taken our first points of profit. And that first point of profit right there would have paid for the first position getting stopped out. And then we would have still had two pieces left to try and play to the top or to scalp if it starts coming back down. But that's just an example of a reversal play. It did not work, mostly because we got that kind of weird consolidation below. So it's unfortunate, but it is what it is. Move on to the next one. So if we were still in the position, we'd be looking to take our second piece of profit pretty soon here. Right there. That is where we would take our second piece off. So if we were still holding the original position, that first piece paid for the first stop out. That second piece would have just netted us 30 cents. And then basically we'd be holding this last one to break even because we'd be up 30 cents. So it stinks that I lost on this position, but it does present a learning opportunity and an education point to discuss, what worked about it, what didn't work about it, potentially what I could have done different. I could have given it a little bit wider of a stop. That would have had to increase my risk, though. So thinking about it from a perspective of how everything was developing, with everything pointing down, trying to take that long play, it was a scalp at best. So that really isn't something that you want to try to leverage too hard into, because the amount of times something like that, giving it more breathing room would work against you, would probably outweigh the benefits. So, and right about here is where our last piece would stop us out, and we'd take a couple cents on it. Again, I did not win on that position, but I'm just explaining how I would have played it if I didn't get stopped out. We do maybe seem to be seeing some shortening of the thrust here in this down move. We now have two touches of the 48. So when you're trying to play EMA cloud crossovers, so if we look at where that first touch of the 48 was, if the low that it made had not gone lower than the previous one, that would have been an ideal entry location. Now we've got this next touch of the 48, but this low is also making lower lows, so that's not going to be an ideal entry location either. If you're trying to play the crossover, what you're looking for is you want to see a weakening of the lows. And that's, of course, when we're talking about a red cloud into a blue cloud. So with the shortening of our thrust, though, we are starting to look for a long position for some corrective activity to our B period. And by corrective activity, I mean just moving more to where trade is facilitating better. I'm going to see how much further sellers kind of try to push this. So we can call that a shortening of the thrust, as we can see that the lows are not making as much progress. Having trouble with my main chart. We are getting close to C period here. Got about 3.5 minutes. Pretty big buying effort right here. Not getting a lot of reward. But at least they're testing the waters. Got a touch of a moving average on our 90-minute. Well, just missed the good price. Let's see if we can get it again. There we go. I'm going to start a little entry position here, or maybe not. All right, we're in. Now this position we are going to give our usual breathing room to. And a little bit more confidence in this one. Seeing a lot of selling effort here. This could be their final death breath, if you will, or it'll be the start of a brand new down move. It looks like it's struggling, like real hard. Ooh, or maybe it isn't. C period starting. I'm going to grab a little bit more for that. 36. All right, so we've got a full position on now. We've got our allotted breathing room. It's below the low C period just made. And the thesis we're playing to is C period is going to give us a little bit of corrective activity. We'll see if we're right or if we're wrong, and then we'll be technically 3 for 3. All right. We adjusted our stop a little bit. This puts us into the T+4 value zone because it looks like C period could try to test a little bit lower and our thesis would still hold true if it doesn't break that level. So we'll be looking to play this up to that resistance level at 372.31. If we do get everything to work out in our favor, that's where we would be looking to shave some profit. And then if it, continues playing on from there, tries to take out some more of the gap that we've created for today's profile, then great, so be it. But we are pushing into weak structure. There really isn't much standing in the way of this selling. So we are probably just on the wrong side of all this nonsense. And now C period has just touched the point where this is where it would need to reverse for our thesis to hold. If it doesn't, we're taking a big fat L. Big fat L. You gotta be kidding me. Gotta absolutely be kidding me. I almost don't want to see it reverse now because I'm pissed. All right, what's our next play? We're just punching into that gap. Let's see. Let's zoom out a bit. Maybe I'm too zoomed in. Getting myself caught. I mean, I still like that resistance level for corrective activity, but I guess I just really mistimed it. I was not going to give that more breathing room than I did to play out. That would have been dumb. Well, we can make one or two more plays before we hit our max tolerable loss for the day. So let's make them count. I got to get a pretty good move to make up for those two misses. So let's see, we're down 30 cents. No, more than that. We're down like 70 cents. Watching two plays now that should have been winners is very aggravating. All right, we're back in. I'm going to see if the top of the channel holds here and if we are truly getting a nice reversal. Targets are still the same. All right. Yes. Yes, I did know. Actually, for one chart that I used to keep up in the background, I would actually have the bond yields juxtaposed over, I can't even remember what it was. But basically, you could just kind of see it with the left axis. Then, of course, sometimes it's fun to do a little comparative study with a company or a ticker that you're watching in relation to the ES or the SPY. So, should have taken some profit there where we touched our target, but apparently I'm a little stubborn today. I guess I have decided that I either want to take a full loss on this position or I want to hit a full correction of this. If we end up breaking this resistance level, I will move my stop up to at least protect some profits. But on that note, I'll be right back. All right, we're back. Unfortunately, the longer it consolidates up here without actually moving, the more theta is going to chew on our value, which is unfortunately going to move the stop that we put in up. And it could, in theory, move it up high enough to where just some volatile action in trying to clear stops out could take us out of our position. The consolidation up here above the point of control, up near the resistance, makes me feel okay about the position that we're holding. I do wish that I was in that first position and it didn't get knocked out and I was able to actually add more to it, because I wouldn't have actually really increased my risk at all. Because then at that point, I would have taken my profits up there and we would have been done for the day. And there is a likely scenario in which I should have taken profits up at that resistance anyways, and then just looked for another play. So it's a little risky what I'm doing, how I'm playing. And I think I've accepted that if we take the loss on this position, if this thesis doesn't work out, we're just going to call it a red day and we'll move on. If we do get that full retracement to correct for that activity from this morning, we should be able to close with our daily goal, which would be nice. And of course, there is the contingency plan that if we do start breaking into the thesis, I will protect the profits that we've made. Yeah, we're getting two-sided trading again along the point of control. It's not ready to break. See if we can figure out where this consolidation is. Maybe we can leverage a little bit harder into this and take advantage of a move. Let's see what happens here. Yeah, that's a pretty hefty selling wave right there. Do we want to leverage into this? Let's see, where would our stop be if we did that? Have to kind of calculate this out first, because if I do leverage into this, this is going to put us at a higher risk. Of course, if we stop out appropriately, we're still not going to go over our daily loss allowance. But if I don't calculate it out quickly, there's the potential for deer in headlight syndrome, and then that's just really bad. I want to make sure that there's no emotion attached to this decision if we decide to do this. Well, if we were going to try the aggressive leverage play, we missed it. That would have been some nice volatility to sell. But there wasn't really any reading that. I did have my finger hovering over the button ready to pull the trigger, but there wasn't anything in particular I was looking at that was telling me that was a good idea. So, still trying to weigh out how much emotion is at play here and how much is actual analysis. That is a very nice initiation candle for buying. So, we probably could have added at the support there. This channel's no longer in play. Do seem to be having a rising support here, wedging towards that resistance. But, and there is a but, there's a lot of two-sided trading still happening down here on this level. And that pretty much just consumed that entire initiating candle. We're about to start D period. Wait, right? 9:30 to 10. Yes, about to start D period. Thought about leveraging in right there. I had the order ready to go. I was just a little bit late. All right, D period, here we go. Whoa. Okay. Tried to put an order in there, but it moved quicker than I could. So it tried to execute as a stop, but the price had already moved well beyond it. It's a lot of buying effort. Let's see if D period can correct the C period high. Ton of effort going in. Well, maybe D period's going to make C period weak. That'll reinvigorate my hope in our long position. If we do get a touch up there, would expect to see a little bit of pullback. Got a lot of negative ticks. Weighted advanced decline. I mean, it's below the zero line, but it's kind of flattened out. Moving averages on the ES and the NQ are still negative. Heikinashi candles, still negative. Daily volume definitely shifted in favor of sellers. Got 75% selling. Period D feels like it's lost some steam. It's getting pinned to that point of control. Well, I think we're going to wrap up the stream here since it is 11 a.m. Yeah, I'll post in the description settings to let you guys know whether or not this position ended up working out for us. All right. Thanks for hanging out. Please like, subscribe. Feel free to leave some comments. Always helps the algorithm. And again, as always, join us on our Discord. Come have fun. Thanks for playing today, guys. Take it easy. Have a good one.